Hi there, welcome to Kneppy Invest. Welcome to another rundown video where I go through what happened today on the ASX. I slept through most of the trading day. Well, not most of it. So I slept for 3 hours from 10 a.m. to 1 p.m. I'm in between night shifts right now, and I aim to get about 3 hours sleep in between my night shifts, and I got exactly that. So I'm a happy camper right now, which means I have no idea what happened on the market, although I do have a little bit of an idea because market index says the ASX 200 was down at 0.2%. Small odds, all tech had a bad day, so technology down 0.84%. But mining companies had a good day finally, up 1.73%. Now, if I remember, I'll go through some of this particular page, but before I do that, let's have a look at some of the comments you did leave on yesterday's video. So let's go to the bottom of Jack Su, who seems to be leaving a comment on every single video, which is great. Love that. When do you make the decision to sell? It is the hardest decision to make, in my opinion. If the decision is made just based on the chart but not financials, for example, do you sell when a stock breaks its upward trend? Some people do that. Yeah, so if I am trading a company, ideally you want some sort of rules in place to know when to sell. That makes it easier. If you just follow your rules, it makes that particular decision much easier to make. Some people don't sell at all. I know Scott Phillips, those who follow him, he has a philosophy that you should never sell a company you have bought into. So he very rarely sells, if at all. And it is, in my opinion, the hardest thing to do. And you might have noticed that a few times in the past 9 months since the start of financial year, I have sold and then bought back in to that company fairly quickly because realization that maybe I've made a mistake. I recently did that with EML and Zip, although we'll see if those are good decisions or bad decisions by the time I resell those positions. So, in my opinion, I still grapple around selling. Buying seems to be really easy sometimes, but selling is the most difficult one. But I think over time, and I think it's very important not to linger on any mistakes you made and try to focus on the good decisions you made when you're selling a position. Because if I go through my history, more than likely, if I add up all my sells, I think over time they would add up to probably being a good decisions overall. But I think we tend to focus on the mistakes we made and not to focus on the good decisions we make. Now, focusing on mistakes is okay if you learn from those mistakes. I think that's the problem some people have, is they don't learn, they just linger and on those mistakes, and it just festers. It really, really festers. So you really have to learn from your mistakes. AU says, have you sold any drone shield? No, since directors selling out. That was one possibility, selling out because the directors were selling out. But I did notice they released an announcement before trading began. I think it was before trading began. I did notice they did release an announcement today. What time was that? At 9:04 a.m. I just remember they released an announcement, and share price at one point today was as high as 75.5 cents. So a little bit of selling came in. So obviously the market initially liked this announcement, but then the sellers came in force, and more than likely that's just because a little bit more negative sentiment in the company right now because directors selling out. So that's another thing you have to keep in mind, that Drone Shield had a lot of positive sentiment, and that sentiment has shifted. And one of the reasons sentiment has shifted for this company is because the director's selling out. Now, that sentiment will gradually change over time. If the company keeps releasing these sort of announcements, and over time, possibly the director's selling, not completely selling out, but selling some of their shares, half of their holdings, that could be seen as a pretty bad mistake by the directors. So I haven't sold. It's a long-term position. What about a chart on EML payments from John's channel? I think you said if it went above $1, you would buy back in. And what do you think of the company itself? Yes, I did buy back in. So let's have a look at the chart. Let's have a look at the chart. Yeah, so here we go. So I've been trading this for, I think I've initially traded it way back in March. So I had an original position, then I've been trading it ever since then. So I bought at 80 cents. I thought this sell-off back in the 29th of November was a little bit too harsh, down 30%. So I bought into 80 cents. I thought that was a good support level. Share price actually did fall below 80 cents for a period. And then they released that announcement on the 18th of January in regards to the PSCIL, and they're getting out of that. And the market liked that. And then the share price was trading in this range between 80 cents and $1. I decided to set out when the share price got to $1 because it had trouble getting through that. And obviously, the more times it gets to a resistance level, you could see that resistance level being weakened. Now, a weird thing is you could say maybe it shows how strong that resistance level is, but I think eventually it does weaken it, and it weakened it when it tested it again on this particular day. Just get rid of, not rid of, or just more decrease the size of my head. On the 11th of March, the share price on that particular day rose 4%. If I remember correctly, the market was down big that day. That was a good sign moving forward. And then I bought in the next day at $1.08. So a little bit higher than what I wanted to, but I do see a little bit of strength in EML Payments. And the share price of EML Payments has continued to rise up to $1.14. Now, this is not up to date because TradingView is 20 minutes behind and $1.13. So a little bit of selling, not a lot, in the closing auction, but just by looking at the chart itself, it looks pretty good. But notice where the share price is right now, $1.13, and between about August and November last year, share price was going sideways, and the share price was going sideways between share price of about $1.06 and about $1.25. So there's a fair bit of resistance moving forward here because many of those shareholders who bought during that period think this company is a dog stock. Whether they're right or wrong is another issue. And the reason they think it's a dog stock is because the share price fell after they bought it. And the mentality around many investors is if the share price doesn't rise, there's something wrong with the company. Not something wrong with their decision, but something wrong with the company. Hence, it's a dog stock. And they want to get out. So there will be a little bit of resistance moving forward. The best way to get through resistance is for the company to release a really good announcement. And then you'll see a lot of interest in the company, share price breaks out. So if I just put a line right here, I'm going to put a line about there. Now, in fact, I'll put the line a little bit higher. Nice. This would be a breakout. If the share price gets above that level, that would be a really good breakout. And I would even consider adding to my position in this trade if it broke out above that level. I don't do that a lot. I don't add to my positions, and it's something I probably want to address moving forward, particularly when I see this sort of pattern and a breakout in the company I'm already owning. Just adding to a winning position, I think over time might be a way to go for me, something I don't usually do. And what do I think of the company itself? It's been going through a lot of problems, lots and lots of problems with that purchase of that, I was going to say Italian, that Irish PSCIL. Hopefully because they got out of that, that's over. That episode in this company's life is over because the rest of the business looks good. It's growing at a pretty good rate. And when I say pretty good rate, just let's have a look at EML Payments, just their growth here. And all I'm doing here is just looking at their revenue growth over time. Go back to 2014. Nice revenue growth over time. A little bit of a backward growth in the most recent year, but that's okay. Even if you look at the semi-annual, or what do you call it? The biannual revenue growth. You can see, yeah, pretty good. Pretty good. So there's a little bit of a dip in behalf to 1 year ago. But generally, this is exactly what you want to see when it comes to revenue growth of a company. Now, this is not revenue per share, and I do prefer revenue per share, but there are some things to like about EML Payments. But just this episode with that PSCIL, whatever it was called again, I completely forget, has driven the share price of EML Payments down a lot. So we're talking about down from about almost $6 all the way down to less than $1. So there is a lot of upside potential for this company moving forward. I don't think it's going to get back up to $6 anytime quickly or anytime soon, just because there's still a lot of negative sentiment in this company. But I am fairly bullish about EML Payments. A great ideas doing daily videos and grade my trades. Thank you, Ryan Hillman. What do you think of MA Offshore? Well, I am trading MA Offshore, and I have bought and sold MA Offshore, what is it, 3 times in the past. I actually don't have it down here, I think. Yeah, so I bought back in. So my original buy-in for EML Payment, I'm not EML, but MA Offshore was way back here in February 2022 when the share price broke out at about 45 to 50 cents. Still remember that. And then I took profits twice along the way, and then I bought back in $1.95 because the company still is releasing really good results, really good announcements, and that's why the share price keeps going up. Increase in volume as well. That's a good sign. So if you just draw a line, I'm not sure if I can do this. I can do that. So just look at the increase in volume from when it broke out. That's exactly what you want to see. And this is telling me institutions are becoming more and more interested in this company. And that fits in with what I'm hearing. So I'm starting to hear MA Offshore more and more in podcasts, that sort of thing. So this is a company that has turned around without doubt. And when I say turned around, if you just look at the weekly chart of this company, all the way back to 2013-14, you can see share price back in then got as high as $24. I still not sure if the share price did get to $24 or if there was a share consolidation, that sort of thing. I don't remember getting that high. It must have been a share consolidation or something. But I still remember being sort of bullish on this company back then, 2012-13. Share price was in an uptrend. And then the company went through some problems starting in around 2013. Share price took a nosedive, and it took a long time for this company to turn around. And I was waiting for this company to break out, and it broke out in late, what was it again? Early 2022. And share price keeps going up. Yeah, so, and the main thing is the company has learned from what happened 10 years ago, and they've really diversified the revenue streams, and that's a good thing moving forward. They were highly concentrated back then, too reliant on mining, particularly the oil and gas sector. I still think they're pretty reliant on that sector, but not as much as they are now. So I should like all these comments. Can you please do a video on Bank of Queensland and OFX? They came out on my scanner, so it may have some good value. Now, I'm not sure if I'll do standalone videos just yet, but I can have a look at those two companies, either in a trading video or maybe even this video. Maybe. Let's have a look. I'm just taking a little bit too much time on these comments. As you may be covering Wiser in upcoming video, can you share your thoughts on substantial shareholder? You might have noticed that in ticker, I actually did have Wiser before I was looking at EML Payments. So the first thing I did, I opened up video comments, and that was the first comment I saw. And I talked about substantial shareholders. So if you go to Wiser, there was a substantial shareholder back a few days ago, and this was Acorn. So they bought some shares, I believe, in its capacity as investment manager for various superannuation funds, institutional investor portfolios, and unit trust, has the power to exercise control of a right. I don't know what that means. So 89.4 million shares in Wiser, 6.6. I just wanted to see if they were a major shareholder in this company, or the major shareholder. They're not. So another fund, our SIN liquid strategy, owns 12.9%, but Acorn comes in second, 6.6%. And they're increasing their holding. The other thing you can do in ticker is you can click on Acorn Capital just to see the sort of holdings this company has. For instance, the biggest holding is in Resilient Mining, which is interesting. The second biggest holding is in Sequoia Financial Group, which is even more interesting because I actually am a shareholder of that company. Third biggest holding is OFX Group. So someone just mentioned that in the previous comment. NextEd Group, MicroX. So just going through all these companies, it seems like this company's focused on mining companies plus small caps. And that's all I'm seeing here. Some of these companies I have never heard of, like Trinex Minerals, Unico Silver, Vintage Energy, Fireflies Metals, Warrior Resources, most of these are mining companies. So I'm much less knowledgeable about mining, exploring companies. Pentrotherm, never heard of that company. So maybe some of these companies are not Australian listed. Now, in regards to them building a position in Wiser, just by looking at this, not necessarily an amazing thing, but you do want to see institutions becoming interested in a company and building positions. Particularly, you want to see many institutions building a position in a company, because over time, that is what is going to drive the share price higher. It's not retail investors, it's institutions. So I'll always look at these sort of announcements. Always look at the ownership of a company, and if you see no institutions or fund managers on the, I'm trying to think of a company. Let's go to Spectra. I could be completely wrong here. I'm trying to think of a company where there's no institutions at all. No, they might have a few. Coastal Watch Holdings, that makes sense. Now I can't think of any company offhand right now, but there's definitely companies out there where if you look at the top holdings in that company, it's just individual investors. It could be directors, just mum and dad investors who own the company and no fund managers at all. Doesn't mean that's necessarily a bad thing, but it would be a really good thing if you see institutions getting, or fund managers getting excited about that particular company. Apple. So if you click on Apple in Spectre, it could be just a superannuation fund for a director, but this is not. Appen has holdings, big holdings in Pure Profile, Blue Glass, Datadot. This is a micro cap fund manager, it looks like, because all these companies are really, really small. Yeah. Anyway, so that's Wiser. Now on to what's happened today on the 14th of March 2024. Let's go back at market index. I'm going to go through what's happened in the sectors and indices today. So we already know that the mining sector had a good day today. Materials up 1.85%. Staples okay, healthcare. But in the red, bad day for IT, telecommunication, which is interesting because I'm really interested to see what happened with Superloop and Aussie Broadband. If you don't know what happened today between those two companies, well, I'm going to talk about it in a second. Discretionary down 0.73%. Financials down almost 2%. ASX 200 banks down 2.4%. So I do own two banks, Bank of Queensland and ANZ, so that's not good for my trading portfolio. Why were the banks down big today? So that's the first question I have moving forward. I don't think I'm going to answer it in this particular video, but one of the things I do research is why were the banks down big today? Pretty sure the banks have had a pretty good week, so maybe this is just profit taking. So if you look at the one-day performance down 2%, 1 week down 1.4%, but a good month, good year to date. So bad day for the banks. Let's have a look at the 3-month chart for the ASX 200 banks. It probably looks pretty good. Yeah, it looks pretty good. This could be just a buy the dip. But just by looking at this, possible bearishness moving into the banks. So possible sell for my two banks that I do own, both probably in small losses at this point in time. So let's go back here. And that's probably all I want to talk about when it comes to the day. So interesting day. And the main thing I want to see copper prices soaring. That's one thing I did notice overnight because I was working. The copper prices had a really good, or copper had a really good day. Let's have a look at copper right now, possibly breaking out. I own one copper company, Hillgrove. So I'm hoping Hillgrove had a really good day. I noticed when I looked at my unusual volume stock scans for American companies, a lot of copper stocks had really good days. So I'm hoping that my copper company had a good day. Here, let's have a look at the copper chart. Yeah, so a nice little breakout for copper. Doesn't look that big, but it was a breakout. Been trading in this range for since 2000. This is the weekly chart, by the way. So let's have a look at the daily chart. You're going to definitely see it when we look at the daily chart. So been breaking or in this range for a while now. And it looks like it might have broken out. Today it's down a little bit, but that's okay. A really good day yesterday, up 3.3%. So now I'm going to have a look at Hillgrove. Just in production, they did a couple of raising that did slightly pee me off because the share price took a tumble from 99.5 cents down to below 7 cents, and then they announced a capital raising. There is potential that the reason the share price fell because someone knew they were doing a capital raising. I just wish they did capital raising when the share price was above 9 cents. That would have been much better. And yeah, a really good day for Hillgrove, up 11.9%. So share price going sideways after the capital raising. Big volume coming in, which is understandable. They did capital raising, and maybe some of those who partook in the capital raising are now selling out. Now, sometimes companies will say, well, we're getting some solid institutions and funds managers onto our registry by doing this capital raising, and then those fund managers sell out almost immediately. You're more likely to get better maybe not security, but you're more likely, if you do the capital raising and get retail investors excited about the capital raising, they're much more likely to hold firm with their holding than institutions and fund managers. So I think one of the reasons you've seen really big volume is some of those fund managers who did participate in their capital raising have maybe not sold out, but they're decreasing their position, because I'm pretty sure the share price fell below the capital raising price. Anyway, I was a little peeved off about Hillgrove Resources capital raising, but the big thing about this company is just what sort of financials they're going to get, because they've just gone into production. Okay, so let's have a look at some of the announcements today. It was a really intriguing day on the ASX. That's just my opinion, some of the announcements. I haven't looked at, I think I went quickly through some of the announcements that were released after midday, and there were a couple of announcements that did intrigue me. So we have a look at those as well. But so after I do a night shift, my ritual is I go for a walk or a run. So I took actually the dogs for a walk. Tomorrow morning, I'll try to go for a run. My typical run after 2 night shifts is a 14K run, but I do have a little bit of an injury, a lingering injury, it's either a groin strain or an adductor, and those sort of injuries can take a while. It's only grade 1, but those injuries can take a little bit to linger. Anyway, so I came back from taking the dogs for a walk, and the first announcement I saw when I opened up this little ComSec announcement thingy, whatever you want to call it, first announcement I saw was Aussie Broadband termination of white label agreement. I went, oh, I'm a shareholder of Aussie Broadband. I went, oh, this is not good. Share price of Aussie Broadband is going to take a tumble. Pretty sure it took a tumble. Yes, down 18%. Makes sense. But I did not know anything else. And then I went back to the start just to see what happened in the announcements today. And the first announcement was Superloop, Origin Energy broadband contract and upgraded guidance. So this white label agreement that Aussie Broadband lost was Origin Energy. Superloop stole it from Aussie Broadband, which is really interesting because Aussie Broadband has put out an acquisition proposal for Superloop. And I think they're just being an opportunistic acquisition because, in my opinion, Superloop is undervalued. And I am trading Superloop right now. So, Aussie Broadband down big, 18%. I'm hoping Superloop is up over 20%. 24.76%. Thank you very much. Share price was as high, according to this, as $1.41. So a little bit of selling during the day, and that selling was in the first few hours of trading. But so even though bad day for Aussie Broadband, a really good day for Superloop, that chart would look absolutely amazing right now. Let's have a look at Superloop's chart. Is it time to be concerned? I am trading Aussie Broadband. Should I sell that trading position? I'll have a look at that as well. So this is a beautiful looking chart. I've been following Superloop for many years, just waiting for that inflection point in the company, waiting for the share price to break out. And it's had promises in the past. So back in late 2021, share price looked like it was trying to gain some traction, but it didn't. And the share price was moving sideways, consolidating, and the chart was starting to look better and better, or more interesting, maybe not better, but more interesting and interesting. And if you just look at around about late 2023, share price is starting to move in a really slow moving up trend. And then it broke out, was trying to break out in the middle of February. There it is at around about 73 cents. And then it broke out, officially broke out, in my opinion, on the 22nd of February. That's when the company released their results. The market liked it. An instant buy for me, in my opinion, on that day. Bought at 80 cents. Then the takeover bid from Aussie Broadband came into, well, we knew that. We were aware of that on the 26th of February. Share price popped up on that. Share price has been going sideways ever since. Now, I will say sometimes that I will sell when there's a takeover bid for a company I own. But this was not a selling possibility for me because I'm still really bullish on Superloop. And even if Aussie Broadband took over Superloop on the cheap, that's beneficial for me because I'm an Aussie Broadband shareholder. If I was not an Aussie Broadband shareholder, this particular acquisition would have peed me off again because I think it really undervalued Superloop. And then, of course, this particular announcement and the share price has broken out once again. Is this a buy? Potentially. So let's have a look at where the share price is now compared to theirs. So back then, the highs we were seeing were about $1.30. Share price closed at $1.31. So it's not a shock that the share price has closed right on these highs we saw back in 2021. It's understandable. So this is potentially a breakout. If the share price actually fell below those highs, that would have been a little bit of concerning play. So last time the share price was this high for Superloop was way back prior to COVID-19 financial panic or during the financial panic. So chart for Superloop is really looking really good. Aussie Broadband. Let's have a look at Aussie Broadband. Is this a selling? So I bought at 351. Share price is 355. Oh, I don't know. Again, so I bought in on a breakout, and that breakout was around about $3.42. Share price fell below 342 cents today, but there was buying. A lot of volume came in, but there was buying, and the share price moved above that particular level. So that support level is remaining firm. At this point in time, in profit on this trade by 4 cents. So this particular bullish looking chart is not looking so bullish anymore for Aussie Broadband. Anyway, so that was one. Lots of comments I was interested in, not interested in BW Trust or Newmark Property. Brookside Energy, not interested in that. Phoenix Resources. Oh, I sold out of my Phoenix Resources position today at 24.5 cents, even though they released this announcement, a new $70 million haulage and logistics contract. And I think one of the reasons I decided to sell out Phoenix Resources is just because of all my uncertainty when it comes to mining companies, because mining companies are so beholden to the price of the underlying commodity. And right now, iron ore looks really weak. And I just thought if iron ore looks really weak, even though I'm bullish on Phoenix Resources, I probably should sell that position. And I put it in a sell at 24.5 cents and it closed at 23.5 cents. So I'm pretty happy with that selling. Maya Holdings released the half-year results. Always going to look at half-year results. Shall I do it in this video? So if you look on the surface, the results look terrible. Oh my God, running for the exits because sales down 3%, profit down to 22.4. Well, that's net profit after tax before restructuring, space, exit costs, and other significant items down to 20%. So you might be running for the exits, but that's not what you do when you're looking at results. Now, I haven't looked at these results in depth and compared it to expectations, and I didn't see if the company released any sort of trading update or that because I didn't have enough time, but I don't need to do that. How did the market react to these results? Did these results disappoint the market, even though you might be thinking, how could they not disappoint the market when the share price is down? And the reason I'm saying this is because I was listening to a podcast the other day, QAV, Quality and Value podcast. So it was two guys. One guy is highly inexperienced, one guy is highly experienced. And the share price of a company, I forget which company it was, fell significantly. It was the Ingham's, yeah, it was the Ingham's, fell significantly on their results. And this guy, and the results looked stunning. Everything was up big. And the guy, the inexperienced guy, just didn't understand why the share price was down big when the company released really good results on the surface. And the main reason why Ingham's share price went down is just because the forward-looking statements made by management and they might have released a trading update or something. But definitely, the forward-looking statements from management were bearish. So that's the most important thing. It's not the results; it's how the results compare to expectations and any sort of guidance the company is giving. So even though the revenue down, profit down, how did the market up 7? See, sure, my holdings up 7.6%. So the market liked it. The market had probably baked in some worse results. My holdings did not give those worse results. Share price, actually, this chart looks pretty good for my holdings. Looks pretty nice. So definitely, so this is not really a breakout. It's just continuation of the uptrend. And this is confirming that maybe the market is right. The share price moved into an uptrend, some positive sentiment around this company. So it looks pretty good, this chart, for my holdings. Anything else? Oh, Appen. Appen, in the news again. Withdrawal of Innodata's non-binding, indicative. Do I always say indicative? Indicative proposal. I did have a look at this. And funny enough, one of the reasons why this proposal was withdrawn is because it says right here, Innodata informed Appen that it was withdrawing the indicated or indicative proposal on the basis that it was intended to remain confidential. Now, that is a way for Appen to say, well, this particular proposal at, was it 75 cents, really undervalues our company compared to where the share price is right now. Share price is on a run. So possibly Appen management just said, well, we'll just put this proposal out there in the knowledge it's supposed to be confidential. And that way we don't look bad or as bad if Innodata withdraws the proposal. Now, how did the market think about this? I have a feeling, I have no idea, because I can't read what the market is thinking about Appen right now. And that's why I'm staying clear of Appen at the moment. But it's still interesting. So let's have a look at Appen. Down 17%. Market didn't like it. Okay. Now, Maya also released board and management changes. So possibly the market likes the management and board changes. Don't know. Anything else here? Oh, Drone Shield. Yeah, Drone Shield. I've already talked about Drone Shield. DGL Group. This was interesting. This was good. So I am trading this right now. They released really bad results. I thought this company's looking cheap. So this is just me trading DGL Group because it looks cheap, but it might be looking cheap for a reason. I'm up in the air whether I should be selling out of my position in DGL Group. So it's going to be interesting to see how the market reacts to this. But there was a little bit of bullishness in this. Now, I don't care about the company relocating to Sydney, Australia. The CFO resigned because of this move. That's okay. I think this move might be beneficial for the company in the long term. I'm more interested in this business update. And the business update did read pretty good, in my opinion. Now, maybe they're full of BS. Who knows? Because the share price has taken an absolute dive. But if they are full of BS and we start to realize this, then I suppose the shareholders could sue the management of this company. So hopefully they're not wrong. Anyway, DGL is pleased to advise that the company is seeing a strong rebound in activity in the second half of financial year 24 after slower than expected first half. Demand for crop protection products has recovered strongly, and DGL's production facilities are working at full capacity to meet a significant increase in forward orders. So if that's all true, yeah, possibly DGL Group does look cheap. So I'll continue to hold this particular trading position. But I wouldn't be surprised to see a little bit of resistance in the trading of DGL Group today. Wouldn't be surprised to see the share price pop up and then share price force down because the share price fell a fair bit recently. So a lot of resistance moving forward. So let's have a look at how DGL Group performed today. Up 6.7%. Okay, and the share price was as high as like 68 cents. So let's have a look at the chart for DGL Group. And it does look like 60 cents is a pretty good support level for this company. So I bought it 60 cents. And we can put just a line there. And it bounced off 60 cents again. So a lot of resistance moving forward for DGL Group. But this could be the first sign that maybe their full year results will be pretty good and may excite the market. And I think, again, for a company with a market cap of $171 million, for some of the results this company has given the market or shown us in the past, I think this company could be looking cheap right now. and wouldn't be surprised to see 60 cents as a low. It's not a it's not a certainty, but sort of a low risk, high upside sort of play. And that's why I'm not willing to completely sell out my position just yet in that company. Anything else here? Going past quite a few. Singular Health, I saw they were doing capital raising. Now, this is interesting. Strategic investment from Craig Sellers. Who is Craig Sellers? I don't understand. I don't know that name. This has happened in the past when someone famous has done a strategic investment in the company. The share price has gone on a run. A world-renowned leading US technology and blockchain developer and entrepreneur and a co-founder of Tether. Okay, so maybe I should know who Craig Sellers is. Investment at 15 cents, a 36 premium to the capital raising. Well, I'm saying that typically capital raising is bad, but this should have really excited the market. The closing price was 13 cents. The previous capital raising was 11 cents. Okay. I would say the share price should be at least 15 cents. Let's have a look at what happened with Singular. 14 cents. So the market not excited. Market was excited. Did get to 15 cents for a little bit. Chart does look interesting. I was surprised there was not as much excitement in this particular news. Chart has been looking really interesting for a while. So a little bit of selling today, not a lot, but good volume coming through. So this company, I'm going to have to do research on this company. Why is there excitement in Singular Health right now? So from what might have been a bad capital raising, in terms of bad, a significant discount to previous capital raising or where the share price is, this looks like a really good capital raising, but market didn't react as well as I thought it might have. Talia Group, I've done a video on Talia Group. Okay, nothing too exciting there. Aussie Broadband. And then we get into some announcements. Digital X went into a trading hub. I'm not going to open up that because I am way behind schedule right now. Mesoblast completes placement. Westgold operational update. Well, that should have gone up. Well, no. Look, gold had a good day today. Clen, this is one I did see, initiates on-market share buyback. I like this. And one of the reasons they're doing it is because, Major said, the value of the company right now is well under what it should be. That's when you do a buyback, when the company's valuation is well below, maybe not intrinsic value, but I think below fair value. And I would say Clen is below fair value right now. So I totally back management doing this share buyback. Does the market agree? Up 10.7%. Now, the chart was looking really bearish. But I still think this company is cheap. I'm maintaining my position in this company because I think this company is looking cheap. Chart, ooh, look at that. Bounced off this support level at $13. Bounced off it nicely about 3 trading days ago. Is that a little weekly chart? What is that? Oh, gee. Oh, I should have been paying attention. This is a pretty good, important level, $13. Got to $13 during the COVID-19 financial panic. Got to $13 in June 2022 when the market was really weak. It's a massive dive in the share price. And just got to $13 and now we've seen the share price bounce. Maybe the management's saying, well, $13 is a price where this company is really cheap. So I think this company is cheap right now. Still growing. Now you might say, well, the profit fell, but in their statement, in this particular announcement, they did say they just increased their spending because for growth opportunities in the future, they're expecting to expand over the next 5-10 years. And to expand, they need to spend money now. So this is a case where the market is looking really short term. And if you focus on the long term, this might be actually really beneficial for the company in the longer term. So that was an interesting announcement. So good work, Clen. Superloop released another announcement, investor communication, origin contract and upgraded guidance. Oh yeah, they also upgraded guidance. So that's another reason why the share price popped up today for Superloop. Totally forgot about that. Image Resources, I'm keeping an eye on this one because this was a mineral sands miner. Their previous project, they ran out of mineral sands and they want to start a new project. So there's a gap between the old project and the new project, and the share price has taken a massive dive because of that. And I was just wondering, why did you leave it to the last minute or something? You see the share price taking a massive dive because of that. There's sort of a gap between projects. really low volume, massive low volume. So what I want to see here is some volume increasing. Thought maybe there might have been a little bit more volume today, but the share price increased 12.9%. The reason share price increased 12.9% is because if you look at the announcement, EPA recommends Atlas project development proposal. So it looks like this project is moving forward, and that's really important because this project has a mine life. If I remember correctly, has a pretty long mine life. So potential that the company is undervalued. West African Resources delivers profit. We already knew that. Arafura Rare Earths, Commonwealth government supports Nolans with $533 million package. Did this excite the market? 76.3% up. Okay. I sort of went past Arafura Rare Earths yesterday because it was, I forget what it was, financing proposal or something. But that's okay. So we've got understanding now. This looks pretty interesting for Arafura, but the share price of this company has been in a long-term downtrend. Is this a breakout? Let's have a look for Arafura Rare Earths. I'm looking at the weekly chart. Should we not look in the weekly chart? It's not, it's very close to a breakout by my definition, 6-month high. Last time share price was this high was middle or late September. So almost a 6-month high. Pretty big volume coming in. So I'm going to put this onto my daily watch list just to see how the market reacts in the next few days. If we start to see share price fall back, that would be negative. If the share price doesn't fall from here, if the share price keeps going up or just goes sideways, that will be bullish move for Arafura. And then we have quantum intellectual property update on indicative or indicative proposals from the two companies that want to buy. I actually have not had a look at this announcement yet. So I sold out of this company 2 days ago because of the new acquisition proposal. I thought there could be a bidding war for this company, and there will be potential that the next proposal could be at like $2 or something like that. So I knew there was that risk. So I'm hoping that's not what this announcement is. Let's have a look. Update on indicative proposal. Okay. Okay, second paragraph is the interesting one here. Quantum and Rouse International Holdings, which is the first company that had a takeover proposal, have agreed to terminate their exclusivity arrangements after Rouse withdrew its non-binding indicative proposal, which was announced to the ASX on the 27th of February. Note break fees are payable, so it looks like there won't be a bidding war. That makes me happy. Okay, so this other proposal is still on the board at $1.82. How did the market react? So there's no bidding war, looks like. So I thought there was a possibility of that. Did the share price fall to take into account there's not going to be a bidding war? Let's have a look. Down 6%. So at a significant discount to the takeover price. Would I buy shares in Quantum? Maybe, maybe not. Let's just update this to see if there's been any other announcements. This video is going on a little bit longer than I expected. Okay, no, there's not. Okay, so let's go back to the best and the worst performing companies on the ASX today. Let's start off with the top losers. So, Narada, no, nothing big here. Aussie Broadband, Appen, we've already talked about that. Nothing on note on that. Look by market cap. Eagers Automotive, maybe they're gone ex-dividend. Polynovo, really good run up for Polynovo, so not surprised to see some profit taking for that company. And Lake Resources, a lot of energy companies on here. Lake Resources, a European lithium, so a few uranium, a few lithium companies, energy companies. AccuSensus, which is, I'm very happy that company's fallen to 63 cents. So I'm doing assess my trades on AccuSensus, and I took a small loss at about 68 cents, and I've forgotten to follow what's happened to share price after. And to be honest with you, when I should grade my trades, I should also grade the trades based off what happens to share price after I sell. So very happy to see AccuSensus going down to 63 cents. So maybe that trade, or the grade of my trade, should be raised a little bit. I think I have maybe an F or D or something like that at this point in time. maybe not that low. So nothing really happening when it comes to the top losers. Let's have a look at the top gainers. Rare earths. We've already had a look at that. Superloop, a lot of resource companies here. Aries Resources, which is a copper company, up 21.7%. Understandable. 29 Metals, pretty sure that's a copper company as well. So understandable. That's gone on a run. Okay, let's have a look by market cap. So A4N, Alpha HPA, Clenville, there we have My Holdings, Superloop, Arafura, Vulcan Energy. I saw a bit of chatter on Vulcan Energy in some of the trading Facebook groups. So maybe that's just a trade. Let's have a look. Oh, yeah, I can understand why. Yeah. And it looks like it has broken out. Yeah, I can understand why. There's a little bit of chat about this company. So there was a nice little resistance level right there. You can see that resistance level quite easy. Share price was struggling to get above that level. And then it broke out yesterday and the volume increased today. So this is just traders getting on board this trade because of a breakout of Vulcan Energy. So very understandable with that one, in my opinion. What else here? We have, yeah, that's about it. Veeam, there's Hillgrove. Yay, Hillgrove. Good work, Hillgrove. Keep going down. Brisbane Broncos, they lost last week. And, well, they probably should win today. So, okay. So that's it when it comes to top gainers and top losers. I think I should end it here. I was going to go through my unusual volume scan. And have made one subtle difference in the way I'm doing my trading portfolio. I've taken out the American companies, and I am now, because I put some more money into my American trading account in Superhero. And whenever I make a trade in my Superhero American account, there's 0 fees. So there is a fee when you do the foreign exchange. You exchange your Australian money to American money. There is a fee there, but when you do individual trades in that account, there's 0 fees. That makes it really intriguing, and more than likely I put money into it and I'm going to make small trades, maybe a $500 worth or 1,000, and I should track the performance of that differently than my trading portfolio here, because I'll be using a little bit different strategies. Now, the strategy I'll be using in America is just based off technicals. Don't really care what the company does. That's the thing I got to get through. And the reason I'm doing that is just to is just to not ignore my biases, because I definitely have biases when I get to trading. Because if I see a company's share price breaking out and I go, oh, I don't really like that company, I'm less likely to trade that. And that can be a bad thing, possibly, moving forward. Biases, it's been detrimental to me, I think, in the past. Say for the banks. The banks broke out, beautiful breakout, and I just went, not the banks, I'm not going to trade that. And I missed maybe 10 to 20% on those trades. So the first company I looked at here, this is my mistake, was this company called, and most of these companies I've never heard of, Sigga Technology. I'm going to talk about 2 companies right now. Sigga Technology, never heard of this company. This company has a market cap of $500 million. This company is profitable. So income of 68 million, sales 139.9 million. And you can see just by looking at this chart here, it looks beautiful. It's right on, just above a resistance level, a pretty strong resistance level. So let me just go to go back here. Sigga. This could be a breakout. Yeah, so breaking out at about $6.40, up 21.24% yesterday. So I should not, and I've actually watched some YouTube videos who say, well, you should never trade this. And I'm of the opinion, this is the perfect trade when you see share price breaking out, even though share price has run up. The reason they say you should not trade this is because the price, has just gone up too much in one day, which is ridiculous, in my opinion. Anyway, so market cap of nearly 500 million. But what was intriguing, even though I've just talked about, I probably should not be looking, it should be a trade, should not be looking at the financials of this company. But I did have a squeeze at some of the announcements or reports or whatever you want to call it that were released. So this company released their quarterly results. I'm actually going to go through this because there was another little announcement here. Here it is. Sigga declares special cash dividend of 60 cents per share. Now, the other thing that really intrigued me was the revenue growth of this company. It looked really strong. Revenue growth of this company looks really strong. So let's have a look at Sigga in ticker. Even though I said I won't be doing this, I'm using different strategies, but I just had to look at this company a little bit closer. Uh, so financials, we'll look at the half yearly data. Now we'll look at quarterly, because you can look at quarterly, I'm pretty sure, in ticker. Although maybe not, because it's taken ages. Come on, just take your time, ticker. There we go. Okay, so this is interesting. Very lumpy revenue. So the reason I was thinking, oh, really good revenue growth is because it went from $9 million to $116.5 million. So I think one of the reasons why the share price might have popped up is because of that special dividend. So it popped up $1.13. So dividend yield of just 10 cents or 10% based off share price 640 and the dividend. And my thinking is not to make a trading position based off a dividend, particularly special dividend, because I think some people get a little bit too excited about dividends and special dividends. But the second company I want to show you was not in this scan. It was in, I think it was the large scan. Yeah, this company was on my watch list, Williams-Sonoma. Let's have a look at the chart. You're going to see why this company was on my watch list because of just the chart. A beautiful uptrend for this company. I want to think Williams-Sonoma is like bed, not baby bed, but like bathroom products, that sort of thing. I think engages in the retailing of home products. It operates through the following segments: Pottery Barn, West Elm, Williams-Sonoma, Pottery Barn Kids, and Tina. So completely wrong when it comes to this company. So yeah, have no idea what this company does. But look at this chart, a beautiful chart. It broke out. So I'd say the breakout was around about September of last year at about $140 and a beautiful uptrend. And then the company released their quarterly results. Share price on this day rose 17.8%. Pretty big volume. This is a continuation of the uptrend. It's not a breakout, but this is a potential buy. I am thinking about this just based off what I'm seeing here. When you look at the weekly chart, beautiful long-term uptrend. So the company has a market cap of 18.2 billion, revenue of $7.8 billion. This is the last financial year. Is the quarter results in there yet? Beautiful growth in revenue from last quarter to this quarter. Heaps of growth in income. Profit went from 237 million to 354 million. So why is this company showing strength? But again, I should not be wondering those. Just play the trade here. Beautiful. But I'm concerned about the share price is a beautiful uptrend, and there. I would have preferred this to be a breakout. I would have preferred the share price to be there, breaking out above $160. So that was the second breakout. There was two breakouts here, and this was the second breakout. So would have preferred this particular announcement to be released on the 17th of November. That would have been a much better breakout, in my opinion. And I think that's all I'm going to talk about in today's video. If you don't want me to talk about a comment or something, a question, if you have a question, leave those in the comment section of this particular video. This video went way longer than I expected, but that's okay. I can ramble on sometimes. So again, main thing is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.